Stock market chaos. Trade war threats send Wall Street into a tailspin. Welcome back to Geopolitical, where we break down global and geopolitical events with insight and clarity. In today's video, we'll unravel the dramatic story behind the latest Wall Street sell-off and how escalating trade war rhetoric between the U.S. and China sent shockwaves through global markets. President Trump's renewed tariff threats and combative stance have not only rattled investors, but also exposed the fragility and interconnectedness of the modern economy. Grab your notepads. This is a true lesson in how politics, global trade, and financial markets collide. Calm before the storm. Wall Street entered the week with optimism, major indexes near record highs, and AI-fueled tech stocks soaring. Investors enjoyed relative calm, trading on positive forecasts and bullish sentiment. But beneath the surface, tensions simmered as market watchers noted persistent risks, unresolved trade disputes, anxieties over global growth, and the threat of renewed protectionism. Trump's threat, a tweet that shook the world. The calm shattered on Friday. President Trump took to his social media platform, issuing a late-morning post threatening a massive increase in tariffs on all Chinese imports. His frustration was aimed at China's new curbs on rare earth exports and retaliatory trade measures targeting U.S. technology, agriculture, and shipping. With the words "no reason to meet with Xi" and tariffs coming big ones, Trump injected sudden uncertainty into markets that had been enjoying relative stability. This was not just a political shot. It had instant market consequences. Wall Street spirals. Almost immediately, stocks plummeted. The Dow dropped as much as 870 points, or about 1.9%. The S&P 500 fell 2.7%, and the tech-heavy Nasdaq lost a staggering 3.6%. Calm gave way to chaos. Sell orders flooded in, volatility spiked, and the VIX, the fear gauge, jumped to its highest level in months. What had started as a typical trading day devolved into Wall Street's worst day since April, erasing months of steady gains. Investors abandoned risky assets, with nearly all sectors in the red except for rare earth mining stocks, which surged on supply fears. The trade war, a brief history. Let's rewind. Since returning to office, Trump has fiercely pushed for reciprocal tariffs on countries with which the U.S. has large deficits. Earlier this year, he imposed 145% duties on Chinese goods after a tit-for-tat spiral, and China responded with tariffs of up to 125% on U.S. imports, from soybeans to tech. The battle over rare earth elements, critical for electronics and defense, became a new flashpoint as both sides weaponized supply chains and regulatory power. Investor panic and safe havens. Friday's sell-off was not isolated to stocks. Gold briefly surged, oil prices tumbled, and the dollar rose as nervous investors sought safe havens. Businesses braced for uncertain supply chains and potential shortages, while CEOs warned that tariffs could mean higher prices for American consumers heading into the holiday season. Why tariffs are so disruptive. Tariffs may be an economic weapon, but their effects ripple everywhere. Rising costs. U.S. importers pay billions more for goods, raising prices for everything from electronics to groceries. Global backlash. Countries retaliate, hurting American exports. Inflation worries. Higher costs can fuel inflation, making the Fed's job even harder. Market volatility. Every new threat or tweet can send billions of dollars evaporating into thin air overnight. Scene 7. How geopolitics feeds market fear. The bigger story is how quickly geopolitical tension translates to economic instability. Global investors react not just to facts, but to rumors, threats, and even hints of diplomatic breakdowns. This week's market crash showed that Wall Street is as vulnerable to politics as it is to earnings and economic data. More than ever, central bankers, policymakers, and global businesses are bracing for political shocks. Market volatility is now the new normal. Winners and losers. Not everyone loses in a trade war. On Friday, stocks of rare earth producers and some domestic manufacturers soared, while multinational tech giants and import-heavy retailers suffered the steepest losses. Small-cap stocks, heavily exposed to both supply chain issues and domestic inflation, took a heavy hit, Scene 9, expert voices and economic forecasts. Financial analysts warn of ongoing volatility as the U.S. and China remain locked in a high-stakes game. Many believe further tariff escalations could tip the global economy toward recession. CEOs and trade groups have called on both governments to return to negotiations and avoid mutually assured destruction. Meanwhile, central banks globally are monitoring the fallout, preparing potential interventions if conditions worsen. What happens next? All eyes are now on future communications from both the White House and Beijing. Will threats materialize into new tariffs? Can diplomacy avert more economic pain? As uncertainty reigns, investors are urged to watch headlines and prepare for a rocky ride. Closing thoughts. The events of this week are a textbook example of how geopolitics and economics are inextricably linked. As the U.S.-China trade war heats up, the world's markets respond instantly, and ordinary people feel the impacts in jobs, savings, and prices at the checkout counter. Stay subscribed for in-depth analysis. Leave your questions and comments below. How do you think the new trade war will evolve? Who will win, and at what cost? Until next time, stay informed and invest wisely.